if you think about it, that most banks, when you ask them, what is the driver that you use in your business model? They speak about cost to serve. What is the cost to serve the client at the branch or at an ATM or through mobile phone banking, etc.? But very often we don't ask the question, what is the cost to the client to actually be served by the bank? So what a client has to incur to be able to get that bank account, right? And I quickly want to dwell on 5 of those quick, and then I'll come to the risks because it flows from there as well. So the first one you're going to tell me is interest and fees. Well, it's not true. For the lower end of the market, the transport cost to the bank is far higher than the interest and the fees. So in Gauteng, in this province, in 2007, research tells us that for the average micro-enterprise owner, it costs about 28 Rand to get to the bank and back. In Gauteng province, this is the hub. Second cost is the cost of time. Poor people standing in queues, getting information in languages they don't understand, etc. So the cost of time and the cost of being away from a job, cost of being away from a small enterprise. Third one is regulatory and compliance cost, the cost of proving who you are. It's a massive cost to prove who you are, where you are from, where do you stay. 46% of people under 3,000 Rand income in South Africa can't give you an address that adhere to the requirements of the FIC regulator. Right. Fourth cost is social and cultural cost. Simple example. I'm from the Islamic faith and I have to take a loan for my business and I have to pay interest and I'm breaking the rules. The fifth cost is psychological cost. The fear of debt, the stress of it. So the reason why I'm starting with this is I want to illustrate to you that branchless banking, in its broader sense, not only payments, but in its sense of getting access to other services, can solve some of these costs. And we are very excited about it. You can hear from Bridget that it's really an area that we all are pulled towards it. But the one thing that we have to remember is that we don't have a long history of branchless banking in the way we saw it exploding on our continent. So we don't know what is the systemic risk of branchless banking. In terms of, if you think about that, the turnover in branchless banking in Kenya just through M-Pesa is 60% of the GDP. If something goes wrong in that system, it will wipe Kenya off the economic map. Right. The branchless banking is now expanding away from just payments and remittances to the opening of savings accounts. M-Shwari, following M-Pesa in Kenya, the provision of loans based on that, on their M-Pesa turnover and their savings turnover. Well, if you provide a loan to somebody and you don't even see the person, right? Somewhere we're going to see things like exploitation of people by the agents. We're going to see people over-indebted, right? And I can go on and on about these risks. So the point is that although this is a very nice topic, very exciting, we have to already now start sort of putting the brakes down slightly and say, okay, as we go along here, let's just keep an eye on these things. Let's keep an eye on treating customers fairly, that we don't exploit customers, that we don't put the system at risk. And that is, I think, a sort of very high-level risk picture.